What is up, you guys? I mean, if I was to tell you that I wasn't hyped for this video, I would be lying. This is my bread and butter. Today I'm going to be teaching you guys how to trade credit spreads. And should you do that or should you trade naked options? What are the difference between those two things? Because when I was getting into this, I honestly didn't even know spreads. I didn't hear spreads. I only traded options for a long while, lost a lot of money, and it was just really bad. It was really upsetting because I knew there was so much potential in this option stuff. I didn't really know how to figure it out and tweak it to minimize my risk. Well, here we go. We are in spreads. Now, just to let you know, if you don't know what options are, options is essentially borrowing 100 shares from someone for a specific price. So if the strike price is 0.75, you're essentially paying $75 to borrow a share. So you're paying 0.75 cents per share times 100, if that makes sense. We're just going to get into this we're going to do this slow, but for right now I'm just going to give you that brief sentence. And then for spreads, at least credit spreads, what you're going to be doing is you're going to be selling people the options. So when you get in those options and you lose a bunch of money and you lose that $100 you paid for the premium or whatever, and you're like, dang, like, where'd that money go? That money went to the person who just sold you that option. So basically, we're going to be the casino today. So let's go ahead and let's take all these people's money. So just to give you some instant credibility here, when you see my screen right here, you see that I'm down $64. That is normal when I'm doing this stuff. Sometimes, the option that I'm doing, it just happens to go up for that time and I'm selling it, so I'm kind of like giving these people money. However, it is not over yet. It is not over until the expiration. See, the great thing with credit spreads is, with credit spreads, as expiration goes, you start to make more money. You start to take their money slowly, because if you've traded options before, you don't want it to hit that expiration day, because as it goes on day by day, it gets worthless. And as your spread goes day by day, especially the credit spreads, it gains more value. So this is Tuesday. I always set it for 1 week, so that's just my strategy. I make it expire after the week, so I have all my money. I'm cashed out on Friday. And this Shopify one that I'm in right now, it is taking a jump because earnings is about to come in on tomorrow. Hopefully earnings will be released and the stock will drop down. There's just a lot of hype to it right now. So no worries though. I'm going to get into all of this, but just to give you some credibility to me and to the sense that, hey, you're 17, do you really know what credit spreads are? Like, are you really an investor? Basically, like I said, you want it to expire worthless. You want these options to expire worthless because you're selling them. Once it expires worthless, all that money that they paid for these options goes straight to your account. So let's go ahead and show you my past history. So I made these plays all this Monday, but here we go. I'm going to show you two, because you're buying a put and you're selling a put, or you're buying a call and you're selling a call. So that's why you're seeing two here. But look, worthless, 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 worthless. Go down even more. Worthless, 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 worthless. And that's just kind of what I've been doing. I mean, I have a smaller account, but if you see, every single one of those is worthless. Like, none of these spreads that I've traded have gone wrong. Now, obviously, is that going to happen every time? Absolutely not. The Shopify one could get me, but hasn't got me yet. To sum it all down, to dummy it down, right here, this Shopify one, I'm selling a call for $750. Okay, so I'm expecting that Shopify will not go above $750 at the end of this week, so the 8th. But do I actually have 100 shares to give someone if this goes wrong? Absolutely not. As you see, my account right now has $1,839 in it. So, like, does that really equal 100 shares of Shopify when Shopify costs, let's see how much it costs right now, $6.99? Absolutely not. I do not have 100 shares of that. So Robinhood, or your trading app, whatever you're using, will not let you make this credit spread, because they're saying, yo, dude, slow down. You don't actually own 100 shares of this. You can't sell it. But then we get into the whole spread area, and that's where I go ahead and I buy a call that's more out of the money. So I'm expecting that, I'm expecting that Shopify will not hit 750, and I'm selling that type of call. I'm selling the call in that, and I'm buying a 760 call, which is more out of the money, in the sense that if it goes their way, I only have a max loss that I can hit. And this is expensive max. My max loss for this one's going to be $1,000. But will it actually do that? No. The only reason it'll get to max loss of $1,000 is if Shopify skyrockets up into the thousands, which I don't think it will do. But I could potentially lose, like it's saying right now, I'll lose 130. So that's just something you want to be warned on. Just be careful with. Anyways, though, let's go ahead and show you some other things. So just real quick, Shopify at $6.98. If it stays at $6.98 for the rest of the week, it jumped up 6% pretty much today. That's a lot. And for it to be at $6.98, if it stays at $6.98 for the rest of the week, I make all the money back. And I think I'll be profiting about $150 on this one. So I'll make max money. I'll make all that money. If it goes up to $7.49 and expires on Friday, I will make all the money as long as it doesn't hit $7.50. So now we're going to go ahead and go into this website that I use to kind of see how much I'm risking, how much I'm max going to gain at the end of this all, and what is the probability that I'm actually going to win on this. So let's go to this place. It's called optionsprofitcalculator.com, and I just love this place. It's the website could be better, but we're going to go ahead and click credit spread, and then we're going to enter in whatever stock we're looking at. So give me one. Let's just choose Apple today, because who doesn't like Apple? We're going to click get price. So Apple's at $299.66. Well, it's actually kind of going back up, I think. And so here's what we're going to do. Let's say we don't expect that Apple's going to drop below, I want to see what they have right now. So buying is this is going to be when you buy the option, and shorting or writing, this part where it says write, that's where you're selling the option to people, just so you understand the whole terminology here. So let's say we're going to go ahead in here, and we're going to choose, let's go ahead and choose the 8th of May. So we expect, end of this week, and we don't expect it to get to, so we're going to the puts. It's $2.99 right now. Okay, let's say we don't expect it to hit $2.90. So at the end of this week, we don't think it's going to hit $2.90. So we're going to go ahead and we're going to click. This is the bid, the average, and the ask or whatever. So we're going to click that 108. And so it sees the total cost is going to be 108 right now. And then we're going to go ahead and buy a more out of the money option. So we're going to go ahead and buy one. We're going to go to that put, and we bought the 108. So we expect that it's not going to go to 290. And we're going to go ahead and buy this one right here, right below it, 287. So it's farther out of the money, right? We expect this one to lose. That's what we want it to lose. So we're going to get that. And we're going to go, it's going to say, so in the end, if this goes our way, we'll get $32 on this one. So let's go ahead and calculate what's going to happen. So look at this. Your maximum risk is $218. So that's how much you're max risking on this. Your max gain is $32. And so your break even will be $289. So if it's $289.68, you're breaking even. And look at this. Look at all the probability here. Even if Apple, which sits right here, even if it drops down to 291, yes, it shows you're losing money. That's what's same thing that's kind of happening right here on my Shopify one, right? It's going up, and I need it to stay down. So I'm losing money. As you see right here, I'm losing $73 right now. But even if it drops down on this day, you may be losing money, right? You may be losing $57, but on the next day, you're losing 57. Now you're losing 54. Now you're losing 46, and bam, you made $32. You made your max gain right here on the expiration date, even if it dropped down to 291. So check this out. Now if it goes up, look at this, all 32. So no matter how high it goes up, your max gain is going to be $32. So look at this color of how much probability you have of it going your way. It's not just, it doesn't have to go up. It can go down and you're still going to make money, if this makes sense. Now, if it goes down below what you asked, then yes, you will lose your money. But look at the green compared to the red. Pretty better chance than your regular options. Let's go ahead and check out a regular option real quick. So now let's go ahead and see what happens when you go ahead and you buy a regular option versus doing a spread. We saw that with the spread, there's a lot more green. Now look at this. If we go ahead and think that Apple's going to go up and we go ahead and buy a regular option, at $305. So we're expecting that the stock will go to 305 by the end of this week. Look at all that red. All this is bad. So even if the stock stays the same, remember last time we saw if the stock stayed the same, even if it dropped opposite, if it went up or down opposite direction of where we want it to go, could still be profitable in the end. Look at this. If the stock even went up a bit and stayed the same, bam, we're losing 70, 113, 138. We lost $138. Even if it goes up to 304, look, the first day we're making 181, but look, now it's 134, now it's 80, now it's 9, and bam, we lost $138. And you guys remember the last time it was going opposite. It was like we're losing 50, then the next day we're losing 25, then 20, and then we're making 38 bucks. So that is why I love spreads so much, because there's so much more chance out there. So obviously, there is still risk to this all, but question is, do you want that 80%, 90% probability chance of winning and making some small earnings and growing your account that way? Or do you want to go big and risk big? And if you're choosing the smaller gains and keeping your account going steady, then that's where the credit spreads is perfect for you. But if you're the person that wants to just go big and risk big and, make these $1,000 plays, by all means, there is strategy to that. There is ways to make a lot of money off that. I 1000% agree with this. However, that's just not me. I know some people who it is them, but if that's you, you look at options. Options is when you're trading naked options, you'll see your portfolio go like this. It'll go here and it'll go up, then it'll come here and then it'll go down, and then it'll go up even more or something like that, or you just blow up the account. I've seen that happen. But with the credit spreads, what you most likely will see is some steady gains. And if you make one wrong, you may take that dip, but you'll start to see some steady gains, and it looks a lot better in my perspective. So if that is you, I just want to let you know, go ahead and feel free to choose whichever ones you want to do. Make sure you like this video. And last thing I just want to tell you, though, real quick, that is with the credit spreads, you want to wait till expiration. You want this to expire. At expiration, you will reach maximum gain, even if you're just a couple pennies above what you set it to be. That $400, even if it's $400.10, I will make max profit at expiration because it's not below $400. So I just want to let you know that, and also that when you go ahead and you get in these, there's always a day for me on this. There's always a day where I'm trading and the day looks like this red day today where I'm down $52. I've seen it look a lot worse. I've seen me down $175, and then the next day it's just beautiful, all green, everything comes back to normal. So just make sure that you know that you're very confident that these things are going to stay where they're at, or not go for Shopify, not going to go above $750, Netflix not going to go below $400, Amazon not going to go below $2,440. Make sure you're very confident in that and you watch those. Don't watch your portfolio, don't watch how much your money's fluctuating. As long as those things all look good, as long as everything looks safe and it looks like it's going in the right direction and you're going to be profitable in the end of this, do not worry about what your portfolio says. It does not matter whatsoever. I hope you guys like this video. Please let me know if you want more tutorials on this stuff. I know I went past on this stuff. I didn't break it all down. If you need me to break it down, let me know in the comment section below. And if you want me to go more advanced and get into some bigger things, how I really find these trades, go ahead and type that in the comment section too. Make sure to subscribe. We'll see you guys in the next one. Peace.